Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice. Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired a successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture
because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to these islands, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It it is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forest on the land that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission, track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. This is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your green in brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
one of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, an equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube-sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, e-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. It is an update on Wall Street. Stocks at or near session highs. Energy stocks helping to lift the market higher amid a rally in crude oil as investors weigh the outlook for global economic growth. Diamondback Energy and Marathon Oil are among the top gainers in the S&P 500 index. Right now, Diamondback up by 6.7%. Marathon Oil also pushing higher right now. It is up by 6.4%. The S&P is up 34 points, up by about 0.8%. Dow Industrials up 248, up by 0.7%, while NASDAQ is up 81. That is a gain of 0.5%. 10-year's down 7/32, 10-year yield 1.30%. Spot gold up 0.7%, $17.92 the ounce. I mentioned the surge in oil. West Texas Intermediate crude up 3.21% right now, 72.72 a barrel. Brent up 2.8%, 75.62 for a barrel of Brent. As for the market backdrop, Noel Coram is portfolio manager at Invesco.
We're watching the data, looking for the underlying and significant moves within the data based on Delta variant and other concerns over the next coming months. And that's when we would look to buy the dip, because ultimately we are hanging our hat on a solid consumer here, and that's supporting credit, that's supporting corporate fundamentals over the long term.
Noel Coram of Invesco. First day of trading for Dutch Brothers. It is an Oregon-based coffee chain, stores all drive-through and sells more cold drinks than hot. Its shares surging in their first day out by 64.8%. So again, recapping, equities higher across the board right now, with the S&P up 32, a gain of 0.7%. Dow Industrials up by 0.7% as well. The Nasdaq Composite Index up by 0.5. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers Studio in New York. Good afternoon to our audience on Bloomberg Radio and YouTube. It's Bloomberg Business Week on this Wednesday, September 15th, 2021. I'm Tim Stenovic. Carol Masser is off again today. She's back tomorrow. In her stead, though, is Bloomberg News cross-asset reporter, also the co-host of Quick Take Stock on Bloomberg Quick Take at noon, Wall Street time, Katie Greifeld. Katie, a rare up day. Although, two in a row could be.
I know. And I want to know what happened at 12:30, because apparently everyone but me really got the message to buy stocks. You really saw the S&P 500 move higher in a big way.
Yeah, we're going to ask Dave Wilson and Kriti Gupta in just a minute. We're going to have more on what's going on in the markets. Also, California Governor Gavin Newsom's job is safe, but what happened? Is it a flashing warning for Republicans? Plus, Goldman's $2.2 billion purchase of the buy now, pay later fintech company Green Sky. We're going to dive into that. Also, the Bloomberg Business Week annual ranking of the best business schools is out. And for the first time, Bloomberg Business Week's MBA ranking included a diversity index that measures U.S. schools on race, ethnicity, and gender in their classes. We're also going to take you to Cape Canaveral, Florida, as SpaceX's first all-civilian orbital mission is T-minus 6 hours to launch. And environmentalist and author Paul Hawken is going to join us on his book, Regeneration: Ending the Climate Crisis in One Generation. All that and more over the next 3 hours. In the meantime, Bloomberg Business Week is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Let's get to the Market Drivers Report. And joining us now in the Bloomberg Interactive Brokers studio is Dave Wilson, stocks editor at Bloomberg News. Also, Kriti Gupta, markets live reporter for Bloomberg News. Dave, take us into it. It seems like two big stories playing out in the S&P 500 today. One of those has to do with oil and the rally that we're seeing in oil, and then also China continuing to really help drag down a lot of U.S.-based stocks, Starbucks, and, of course, the U.S. casino operators that operate in Macau.
Yeah, absolutely. And, you look at in balance and you see that, it's a market that's moving higher. Come off its highs of the day, the S&P 500 has. Nonetheless, you've got all 11 of the main industry groups in the index up. You've got 4 stocks higher for everyone that's down. You mentioned energy. It's at the forefront of the parade, you might say, with the S&P 500 energy index up more than 3%, thanks to crude rising, the international benchmark Brent getting above $75 a barrel for the first time since early August. So that group is definitely at the forefront. Then you see raw material producers, industrial companies, financial companies, mostly the economically sensitive groups. But, the exception there is the consumer discretionary category. And that's where you find, among others, the casino owners you were just mentioning as far as Macau goes, that Chinese city that wants to increase regulation on the industry, maybe get some more local ownership. But, stop me if you heard things like this before in relation to China. It's been more technology focused over the last several months. Now, though, you've got the casino owners kind of front and center. And so, they're taking hits for a second day. Wynn Resorts notably down more than 8%. Biggest drop in the S&P 500. And then, Las Vegas Sands and MGM Resorts both off about 3.4%, and they're dragging down the index too.
And so, Kriti, the casino owners, to Dave's point, they're really feeling the pain today. But if you look overall, it seems like a pretty good day in stocks. If you look at the S&P 500, up 0.8%. And that was a little surprising because prior to today, we had really this well-established pattern of you'd see a lot of overnight strength in equity futures. Then the stock market would actually open and the indexes would kind of bleed lower throughout the day. But Why has that changed? First of all, why was that happening, and what changed today?
Yeah, absolutely. So there was a major kind of point that we made about traders. I mean, this all comes down to the technicals. I mean, we say that when we don't actually know what the reason is, but this time, I swear it is actually technical. So to your first point, the idea that you're fading the open, really interesting concept here, because this was something that used to happen last year, actually, where you started to see a lot of the dip buying, a lot of the kind of momentum into stocks come from foreign investors to begin with. And that kind of started to pick back up lately over the last couple of months. The big difference here is that U.S. investors would kind of take it to the close, take it to those record levels, because it would be, first you get that global bid on stocks, and then you would get the U.S. bid on top of that. And now they're kind of changing their mentality. This is a regional divide where global investors are hopping into futures contracts, but then American investors saying, well, hold on a second, we are concerned about that growth story. So they fade it right at the open. So this has been happening for about the last 7 days. Today in particular is interesting because it does come back to technicals. A lot of people were going into the open today saying we have to wait for stocks to get faded down to the 50-day moving average, 44.29 on the S&P 500, and that didn't happen. You had that fade for about 2-3 minutes, I think, and then it kind of came back up. And then a really important piece is that as soon as it crossed, and I'm just looking at the chart here for our radio listeners, crossed about 44.57, 44.58, it tested that level 3 times. And on the third time, that was that big move that Katie was talking about at around 12:30. That's when it broke higher. Now, if you're a technical analyst, this is a big shout out to Bill Maloney on the Markets Live team. He says that when you're looking at technicals, they tend to try and test levels 3 times. And that third try is really that make or break case. And it looks like it made it past 44.58 and seems to just break higher. So no fundamental drivers today, but to me, it seems like a technical story.
Okay, Dave, rapid fire. We have about 20 seconds. You mentioned that energy is the top performing sector, but is this just a reflation false dawn? Is this going to fade like it typically has?
You know, that's the question, because if you look back over the past year and a half, you've certainly seen energy at the forefront of the market's gaze, and then you've seen it fall back. So you do have to wonder whether what we're seeing now can carry through or just becomes, as you put it, another false dawn.
Well, it remains to be seen. Dave Wilson, stocks editor at Bloomberg News. Kriti Gupta, Markets Live reporter for Bloomberg News, both with us in the Bloomberg Interactive Broker Studio. Dave's going to be back in just about 90 minutes with his Stock of the Day, Chart of the Day, and Song of the Day. It's time for the Bloomberg Business Week Bite of the Day, one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com. Today's number is $4.4 billion. Consumer spending on video games hit a record high for August, rising 7% to $4.4 billion. NPD Group data showed so far this year spending is up 13% to about $38 billion. The data helps assuage concerns that the pandemic boost in gaming would wane with economic reopenings. Well, let's head down to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is there. Hey, Nance.
Hey, Tim. President Biden is meeting this afternoon with 2 Democrats who are pivotal in his broad economic agenda. Senators Joe Manchin and Kyrsten Sinema have said that they're uncomfortable with the current $3.5 trillion price tag of social spending. Meanwhile, lawmakers continue working on ways to pay for the plan, with the House Ways and Means Committee looking at an increase in the corporate tax rate from 21% to 25%.
Democrat Judy Chu argued for the increase.
The least we can do is to ask corporations whose profits grew and grew and grew during the pandemic to help by paying their fair share in order to support the workers that make these companies rich.
Republican Mike Kelly.
What kind of a government would come up with policies that would actually make it possible for more people to have better jobs? And saying, no, this is the exact problem we have in America. These damn wealthy people get away with too much.
Republicans added that the proposed increase would drive companies to move overseas. In Washington, Irv Chapman, Bloomberg Radio.
Senators want answers about the bungled FBI investigation of convicted sex offender Larry Nassar, the USA gymnastics team doctor who abused scores of young female athletes. Olympic gymnast Michaela Maroney says she was shocked when the FBI did not take immediate action on her allegations.
I thought, given the severity of this situation, that they would act quickly for the sake of protecting other girls. But instead, it took them 14 months to report anything when Larry Nassar, in my opinion, should have been in jail that day.
Maroney and her colleagues are urging the prosecution of the FBI agents involved. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Tim Stenevec and Katie Greifeld live in the Bloomberg Interactive Brokers studio in New York. Katie, a handful of virus stories that I want to get to this afternoon. Starting with Pfizer, the company saying that data from the U.S. and Israel suggests that the efficacy of its COVID-19 vaccine, it wanes over time, and that a booster dose was safe and effective at warding off the virus and new variants.
So they will detail this data in a presentation to the FDA on Friday. And we know that, the subject of whether Americans really need booster shots at this point has been up for debate among, U.S. regulators. So we'll see if that message lands. Obviously, Pfizer thinks it's a good idea that, you should take more Pfizer shots.
I think that is a fair characterization. I also think there's a lot of questions that remain. It's not just yes or no when it comes to boosters, as we spoke about with Dr. Sandra Galea from the Boston University School of Public Health yesterday. It's whether or not you take a booster if you're of a certain age, if you have certain conditions. Do we know if you need a booster if you have a J&J shot, or if you take a booster of a Moderna vaccine, if you got a Pfizer vaccine? So many questions that we don't yet know the answers to. And I think also it really gives us the notion that as the entire pandemic has played out from January, February of 2020 until now, it's a developing story. And that's the way science goes.
Absolutely. And Pfizer, this data, it's trying to provide some of those answers. Some of the findings that caught my eye was that giving a third dose to people over the age of 60 was associated with an 86% effectiveness against testing positive for COVID starting a week after the booster.
Who knows?
Who knows?
Yeah. Another story that I wanted to get to is from Dow Jones, and it's about how finding a good children's mask is even harder this fall as the Delta variant surges. It seems as though those good masks for kids are hard to find as schools open up. Also, I know that my wife is having a hard time finding the mask that she likes as more and more people go back to work. Check this one out at Dow Jones. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is an update on Wall Street right now. Stocks at or near session highs. Energy shares leading the S&P 500 index into positive territory for only the second time in 8 trading sessions. Session highs right now is the concern that has weighed on investor sentiment about a slowdown in economic growth eases. The S&P is up 34, up by about 0.8%. Dow Industrials up 226, up by about 0.7, while NASDAQ is rallying 92 points, up by 0.6%. 10 years down 7/30 seconds. 10-year yield right now 1.30%. Spot gold down $12 the ounce, back below 1,800 at 17.92, down 0.7%. West Texas Intermediate crude rallying 3%, 72.60 a barrel on WTI. First day of trading for Dutch Brothers. That is an Oregon-based coffee chain. Shares of Dutch Brothers up now by 64%. First day out for Swiss running shoemaker On Holding, whose proprietary cushioning technology has attracted tennis legend Roger Federer as an investor. Its shares up by about 50% in its first day of trading. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, a handful of virus stories as we get to our virus update this afternoon. Cases in the world surpassing 225 million, deaths so far exceeding 4.6 million. More than 5.79 billion doses of the COVID-19 vaccines have been administered thus far. We talked about it, Pfizer saying the data from the U.S. and Israel are suggesting that the efficacy of its vaccine wanes over time and that a booster dose was safe and effective at warding off the virus and new variants. Also, President Joe Biden is set to meet with executives who've taken steps to require employees to be vaccinated, turning to businesses to drive a new wave of inoculations. Let's get into it right now with Somi Ichumpati, the co-founder and CEO of Cleared4. Cleared4 is a cloud-based health verification platform that makes monitoring and managing COVID-related safety and compliance both easy and cost-effective. Dr. Ichumpati, thanks so much for joining us. I'm wondering what you think the role of private companies that they have in getting people in the United States vaccinated.
Oh, sure. So are you referring to the Pfizer booster? Are you referring?
No, I'm referring to mandates in the way that the president right now is meeting with executives from companies to try to get them on board with his policy.
Well, right. So the policy is as you recall, had several components. One was on the federal employees and federal contractors, and he obviously has jurisdiction of some sort over them. But then also the private companies, and that is about 80 million employees at last check, if you just look at the companies that had over 100 people. And the issue is that they're going to have legal challenges, and there's going to be an issue of whether they are effective in decreasing COVID in the companies. And so what we're going to find is we're going to have multiple tiers of companies. Some in the blue states will probably not have their attorney generals challenge these issues, and they will probably have buy-in right away. But other companies will probably wait, or if they're in a red state, for their attorney generals and some sort of legal justification that they have to go ahead and do it. Because it is a pretty heavy ask to do it of your companies if you don't have buy-in.
And so, Dr. Ichumpati, we've heard some pushback to vaccine mandates and asking for proof of vaccination along the lines of, it's against HIPAA to ask if I've been vaccinated. Is that true? Is it actually against HIPAA to, require that someone prove that they have gotten the shot?
You can say it's against privacy laws, but it's not against HIPAA. HIPAA is about the storage of information and the dissemination of information within an electronic system purely regarding health practitioners, meaning hospital and CVS and drugstore databases, things like that. HIPAA is not about a company's private electronic records because you're actually asking the employee to give the information. They can just choose not to, but it's not against HIPAA. It is potentially against their privacy, and they may be uneasy with it, but it's not a HIPAA violation, which has a different jurisdiction of who to enforce it.
What about a company that wants to advertise that all its employees are vaccinated? I can think of perhaps maybe a hair salon or something. Are they allowed to put on the door that, hey, all of the employees are vaccinated?
Sure, they're very much allowed to put on the door. And if you remember, the EEOC gave a federal allowance that companies are allowed to ask their employees if their vaccination status and publicize them. And what actually that does is it allows the federal government to push it back to the state. So the state attorney general now will be the one to challenge it. But I think that's actually a very strong point. For example, if you were going to a restaurant indoors, summer is almost coming to an end, and you're going to be probably dining indoors more these days. Well, some people definitely would want to be somewhere where they knew all the waiters and bartenders were vaccinated.
And so I want to ask about Cleared For. I hope I said that right, because you work with companies like Netflix, Yankee Stadiums, and universities. And I want to focus on the universities because I'm curious what hurdles schools are running into as students return to campuses.
Sure. Well, so Cleared For works with many different colleges. I think we're up to about 80 now or something like that. And each college uses us differently. For example, some colleges mandate vaccinations and others mandate vaccinations and weekly testing. One of our colleges actually mandates weekly testing and vaccinations, and they will not let students into a classroom unless their weekly test has turned up negative. Cleared For is actually able to use our platform to integrate with QR codes for somebody's ID badge and integrate with it, and they will not have their ID work in the building if they have a test that is positive for COVID.
Do you see this being a permanent solution? I mean, is Cleared For the type of platform that exists for the rest of our lives? Like, we're going to have to be monitoring this stuff?
Sure. Well, everything's dependent on certainly the outcome of the pandemic. And what I think we would all like to think is that it's going to go away tomorrow. And this comes back to the vaccine hesitancy. So many of the reasons that people have told us of why they don't want to be vaccinated, because we hear all the reasons, is essentially denial. You don't think that COVID is serious. It's not going to happen to you, or if it does, it'll be very mild. And so it's basically a function of denial. But if you accept that the pandemic is going to be around for the next, we could say 1 year, 3 years, depending on where you are in the world, maybe even more, because the vaccine rates in some of these developing countries is minuscule. And so if you acknowledge that it's going to be here for a little while at least, it's probably worth it to understand that you need to have a solution to keep people safe. You lose productivity when your employees are ill.
Dr. Somi Ichampati is the co-founder and a CEO at Cleared For. It's a cloud-based health verification platform that makes monitoring and managing COVID-related safety and compliance solutions. Dr. Ichampati, thank you so much for joining us on Bloomberg Business Week on the phone from New York City. Well, coming up in just a few minutes, we're talking all about the California recall election, a win for Governor Newsom, but what does it mean for the Republican Party? All that and more in just a few minutes. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stennebeck and Katie Greifeld live in the Bloomberg Interactive Brokers Studio in New York. Governor Gavin Newsom survived the recall election in California. Results coming in, well, he was called as surviving it just moments after polls closed yesterday. In just a few minutes, we're going to be joined by Jonathan Bernstein from Bloomberg Opinion. He writes about politics. He's going to join us on the phone from San Antonio and talk all about why this could be a flashing warning for the Republican Party. All that and more in just a few minutes. In the meantime, let's get a check on that trading day with Charlie Pellet.
Hi, thank you very much. Higher across the board right now, but just do want to bring you up to date on a developing story. Shares of Blue Apron halted right now. A couple of resignations there. Blue Apron says Matthew Salzberg and Barry Salzberg have resigned. Jennifer Carr-Smith will succeed Salzberg as chair. Company also announcing a planned $78 million in equity capital raise. So developments from Blue Apron, shares of Blue Apron, APRN on the ticker, halted as investors digest that news. Stocks higher across the board right now with the Dow, the S&P, NASDAQ, all surging today. Energy shares leading the S&P into positive territory for only the second time in 8 trading sessions. Right to the numbers. S&P up 33, up by about 0.8%. Dow Industrials up 233, up 0.7. NASDAQ up 95, a gain of 0.6%. 10-year down 7/32. 10-year yield right now 1.30%. Spot gold up, down 0.7%. Spot gold down just about $12 the ounce at $17.92. And West Texas Intermediate crude up 3% right now, up $2.09 a barrel, $72.55 for WTI. COVID-19 deaths in the United States and cases have climbed back to levels not seen since last winter. Dr. Bhakti Hansati is Associate Professor of Emergency Medicine at the Johns Hopkins Bloomberg School of Public Health.
What we're seeing is a plateauing of that peak that we have been experiencing for the last week. The deaths are still going up, but previously we have seen that there is a lag in the deaths being reduced as the pandemic itself plateaus.
Dr. Bhakti Hansati with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among the vaccine stocks that we track, Pfizer up 0.1%. Its German partner, BioNTech, its ADR is up 5.5%. AstraZeneca, ADRs there up 1.1%. Moderna up by 0.9%. Johnson & Johnson up by 0.5%. First day of trading for Dutch Brothers. That's the Oregon-based coffee chain. Its shares surging now by 64.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet, Tim Stennebeck, and Katie Greifeld in the Bloomberg Interactive Brokers Studio. Well, California Governor Gavin Newsom has survived the recall effort against him. It wasn't close, and our next guest, Jonathan Bernstein, writes that the Republican claims of election fraud are not only fictional and dangerous for democracy, but also may be sending a message to Republican voters that voting is futile. Jonathan Bernstein is a politics columnist for Bloomberg Opinion. He joins us on the phone from San Antonio. Professor Bernstein, great to have you back on the show. Do you think it's the narrative that has emerged since the 2020 election about voter fraud that caused Republicans, or perhaps are causing people not to go to the polls?
Well, we don't know yet. It's certainly plausible. You know, if you tell, there's 2 pieces to it, actually. One piece is that Republicans have demonized certain types of voting, so mail-in voting. There was a email this morning that Trump sent out, a fundraising email that said, "Don't trust mail-in voting." You know, if you're telling people that they can't use one of the main methods that they use to vote, that makes it harder for your own voters to vote. Whatever so that's one problem. The second problem is if you constantly tell them that elections are fraudulent, that may actually dissuade them from voting. We don't know if it's the case. It does seem that Republicans did a little worse than we thought they would based on the polling. in the Georgia special elections, the Senate elections back in January. They may have done a little worse than the poll. They did worse than the polling in California. We don't really know that that's related to this, but it's possible, and it certainly seems logical that it's something that they'd want to watch out for.
And so, Jonathan, those two things you mentioned, the sort of demobilization and also the messaging to the party base that voting is futile. I mean, what could that mean for Republicans in the upcoming elections? I mean, do you expect them to actually cost them?
You know, I think it's a potential danger. We don't know if it'll turn out to mean anything. You know, the midterm elections tend to be referendum on the president. And so most likely, if Republicans are very upset with Joe Biden, they will find their way to the polls no matter what kinds of demobilization messages they're getting from their own party. But we've never had a message like this, so it's very hard to guess whether it will have an effect or not.
What I found particularly interesting about Larry Elder's concession speech yesterday was that, one, there was a concession speech. Two, it came so closely after the votes hadn't even totally been tabulated, but the election had been called. And he didn't make any mention of fraud or the idea that there were irregularities, which was a narrative that had emerged in the days leading up to the election.
Including from himself.
Exactly.
He had a website out detailing how fraud had happened, even though the count hadn't been done yet and the election hadn't been taken yet. But, you know, that's a good sign for Republicans. You know, it also is the case that when you lose by, it's going to wind up being around 25 percentage points. It's hard to make the case that there's anything fraudulent about that. So perhaps if it had been, you know, a 5 to 10 point margin, you know, he might have behaved differently. You know, it was a good sign. Let's see whether they keep it up.
And Jonathan, I'm curious to hear your thoughts on the choice of candidates that the Republican Party is putting up, because you make the point in a Bloomberg opinion piece today that Elder was sort of running as a Trump Republican and an ideological conservative, which are sort of naturally at odds. But is that the case for most of the Republican candidates we've seen, or the ones we're talking about as potentials?
You know, I think that you have to look district by district, state by state. That's not something that's going to have most likely an overall effect on voters, but it could have an effect. And the thing that if I was advising Republicans, I'd be very worried about is that there's a whole series of candidates that they've put up, you know, Tea Party candidates who just massively underperformed. There was Todd Akin in Missouri, if you remember, who said some things about rape that got him in big trouble. There was the Senate candidate in Delaware who had a TV ad about how she was not a witch. So, you know, if we don't know, some of those candidates have won.
Right. It certainly runs the gamut, and we have plenty of time between now and what happens in 2022 in the midterms. Professor Jonathan Bernstein, politics columnist for Bloomberg Opinion, joining us on the phone from San Antonio. Check out his column, California Recall is Republican Danger Sign. Let's get a check of the latest world and national news. Nancy Lyons joins us from our nation's capital. Hey there, Nance.
Hey, Tim. Olympic gymnast Simone Biles is denouncing the FBI for turning a blind eye to the sex abuse she and other young athletes suffered at the hands of former USA gymnastics doctor Larry Nassar. She testified today before a Senate panel, urging the prosecution of the agents involved.
To be clear, I blame Larry Nassar, and I also blame an entire system that enabled and perpetrated his abuse.
Biles says it feels like the FBI went out of its way to protect USA Gymnastics. Nassar is serving time on a variety of state and federal charges connected with the abuse. Well, California Governor Gavin Newsom is calling his victory in last night's recall election a win for science, workers, and women. Voters rejected the recall effort by about a 30-point margin. California Congressman John Garamendi says it was clearly a repudiation of Trump supporter and radio talk show host Larry Elder, the leading Republican in the race.
What happened was a total rejection of Trumpism, which could be expected in California, but not by the margin that we've seen. The campaign really came down, do you want Newsom in the job or do you want Trump in the job?
Garamendi tells Bloomberg despite Elder's loss, we can still expect to see Republicans offer up Trump-like candidates in next year's midterms. The list of 12 finalists for this year's Toy Hall of Fame include Cabbage Patch dolls, American Girl dolls, and the games of Battleship, Risk, and Billiards. Fans are invited to weigh in as part of a Player's Choice ballot that closes September 22nd. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Tim Stenevec and Katie Greifeld live in the Bloomberg Interactive Broker Studio in New York. Katie, among the most read on the Bloomberg terminal this afternoon. Speaking of politics, we are not too far away from the midterm elections in 2022, though I do think we, are still too far away from them. But nonetheless, already on the radar of rich donors are election officials. This coming thanks to President Donald Trump.
Yeah, and it's interesting. You are seeing both Democrats and Republicans raise money for these roles. And again, these are, at least in past election cycles, are largely bureaucratic roles. But obviously, after the experience of the 2020 presidential election, counting ballots, it's an important job.
Yeah, so from the Republican side, Republicans are backing Secretary of State contenders who echo Donald Trump's false claims that the 2020 election was stolen from him. Democrats have also seen an exponential increase in the amount of money that they're raising for the role, which, as you mentioned, it's often sought as a stepping stone to higher statewide office.
Yeah, and you have seen former President Donald Trump himself. He has endorsed primary candidates in 3 Secretary of State races. You don't normally see that from a former president, but just last week, he called Michigan's Christina Caramo strong on crime, including the massive crime of election fraud.
Remember, secretaries of state are the officials who control voter registration, ballot counting, and election equipment in many states, including some key presidential battlegrounds. They were thrust into the center of Trump's campaign to overturn President Joe Biden's election victory. That was last November. President Trump accused some of them allowing cheating, particularly Georgia's Brad Raffensperger, who was a Republican, and he took his dispute with Trump public. I remember hearing him interviewed in many different places, and I think he was an outlier because even though he was a Republican or is a Republican, he really spoke out about the pressure that he was facing in the wake of the 2020 election. We were just speaking to Jonathan Bernstein about this, and he makes a point in his column that this could have affected the outcome of the Senate election, the special election in January, and tipped the Senate to Democrats. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks at session highs as the concern that has weighed on investor sentiment about a slowdown in economic growth eases. Energy shares leading the way higher. Right now, West Texas Intermediate crude is up 3.1%. Some of the energy names that are rallying today include shares of Diamondback Energy up now by 7.3%. Marathon Oil Corp up by 6.9%. The S&P is up 35, up by about 0.8%. Dow Industrials up 242, up 0.7, while NASDAQ is rallying 101 points, up by 0.7%. 10-years down 6/32, 10-year yield 1.30%. Spot gold down 0.6%, 17.93 the ounce. And again, worth repeating on crude, West Texas Intermediate crude up 3.1%, 72.64 a barrel. Microsoft has announced the largest ever stock repurchase program of as much as $60 billion at a time when lawmakers are considering a tax on buybacks. Microsoft shares up now by 1.5%. Recapping, stocks higher, S&P up 34, up 0.8%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, Bloomberg Business Week is out with its best B schools of 2021 to 2022. We've got an all-star lineup to talk all about it, and plus a new diversity index that the company included in its ranking. Joel Weber is editor at Bloomberg Business Week. He's with us in the Bloomberg Interactive Broker studio. Also joining us, Jeff Green, managing diversity reporter for Bloomberg News. He joins us on the phone from Michigan. You can read all about the Bloomberg Business Week Best B Schools of 2021 and 2022 on Bloomberg.com and, of course, at Bloomberg.com/businessweek and the Bloomberg Terminal. Do we do a drum roll, Joel?
Why not?
Okay.
I mean,
drum roll.
Stanford. Repeat.
Not coming as a surprise to anyone who follows business schools closely, I think.
Well, and it has been one that we've had them at the top before. They've been knocked off the top before, but they are back on top. Another one that has been kind of a sleeper and has repeatedly shown up in our rankings is Dartmouth's Tuck. They came in number 2. And then Harvard at number 3 to round out the top 3. Business Week has long been known for its business school ranking, 30 plus years that we've been doing this. And I think the thing that we've really doubled down on, and props to Caleb Solomon, who's been one of the main architects of this, is we've really leaned into the data and the surveys. We talked to hundreds and hundreds of students and let that inform so much of what ends up being part of the ranking.
Alumni, too?
Alumni is a huge part of it. And then this year, which is, I think, really exciting, and I can happily share the mic here, is that we're always looking for ways that we can make this ranking be more full-throated even. And this is an example of it. We've added a significant amount of diversity into that. So Jeff, let's bring you in. How did you grapple with that and all the articles and stuff that you got to write in accompanying the ranking?
Well, it's kind of interesting. There's sort of two things going on at the top level. Sort of the macro look. B schools are surprisingly not diverse, I guess, or not surprisingly. They kind of mimic what you see in the C-suite in terms of, but when you look at college overall and graduate school overall, it tends to be 60-40 women to men. And when you look at B school, it's flipped, where women are still in the minority. And with gender, I mean, with race and ethnicity, you still see the applicants lagging where they would be in the population based on where they're in the schools, that's more of a universal truth across all education. But it was interesting kind of look at what's working and how different the rankings are when you compare the best schools for diversity to the best schools in the ranking. Your top 3 schools were not in the top 10 of the ranking that I was writing about. They were, however, in the top 20.
So, Jeff, when it comes to diversity, for the universities that aren't doing so well in terms of the diversity of their student bodies, do they seem concerned about it? Are there efforts underway at these universities and colleges to improve on their diversity measures?
Yeah, I mean, I actually went out of my way to interview the last place school, BYU, and even there, just in this their last sort of round of employee reviews, every employee at the biz school has to say, what did you do in the last year to improve diversity, and what are you going to do in the next year? And they have a checklist of all the kinds of things they consider, like 3 pages of things they could be doing depending on their job in various aspects of the university. Recognizing that they can't just say, that's not our thing or whatever. Nobody says, just as nobody says in corporate America, yeah, diversity is not really our priority. It's clearly top of mind, particularly in the last year and a half.
Jeff, you're managing diversity reporter. We've gotten to talk to you a lot here on Bloomberg Business Week Radio and at Bloomberg Quick Take about the way that the C-suite is or is not diversifying, the way that diversity efforts are or are not working at America's publicly traded companies. Who's doing a better job, U.S. companies or U.S. business schools?
When it comes to big U.S. companies versus big U.S. MBA programs, definitely big U.S. companies. But I think the pressure's different. I mean, the top 100 companies in the S&P, can't hide. And they're under really direct pressure to do something different. And they're the top 100 companies and people want to work there. It's an easier sell. Where I think there's some issues in the way that enrollment works and how people come into colleges, into business school, that restrict the pipeline, and to some degree is maybe even more challenging, unfortunately, in the MBA world than it is in the corporate world. But I would like to say one of the things I found really interesting that is a really big opportunity that corporate America should be looking at is a lot of these programs are like 100 students or less. And if you have a program that has 100 students or less and it comes anywhere near reflecting the diversity of America, this is a great laboratory for even majority executives to learn about what the future holds for business. So you should really be looking at the graduates from these smaller schools who are in diverse programs as maybe somebody who's kind of been there, done that, where you get to one of the big schools with 1,000 students, you can still kind of stick to your own, which is a problem.
So Jeff, actually just segue that into Jaden Powell, who is a graduate of the North Carolina State University Jenkins MBA program, right? Which that program is #1 in the diversity index.
Correct. Yeah, and it was interesting talking to her. She didn't blame the company she worked for, but what she said was, she's a younger black employee in a workplace that doesn't look like her. She was younger and of a different color than most of her coworkers, and she sort of lacked the confidence to participate. But coming into a program aimed at students like her, she's gaining that confidence. She recognizes that gaining tools where she can better. So when she comes out, she'll be better equipped. Had a similarly interesting conversation with the dean of Howard's Business School. This is an all-black school, so obviously the students are in a program that is, very comfortable in terms of racial diversity for somebody who's black, but he has to then also think about what are these students going to face when they leave and go to a place that's definitely not going to look like Howard's Business School. So you kind of look at how can you make the students successful when they leave these programs just as much as you have to try to get them in there in the first place.
Well, a fantastic series of stories available at Bloomberg.com and, of course, on the Bloomberg terminal, including Jeff's stories about his series of B-School stories, including business schools training future execs have a diversity problems and MBA programs aren't enrolling enough black and Hispanic students. Jeff Green is managing diversity reporter for Bloomberg News, joining us on the phone from Michigan. Joel Weber is editor at Bloomberg Business Week. He's with us in the Bloomberg Interactive Broker Studios. This story, the 2021 and 2022 top business schools from Bloomberg Business Week, is also an interactive story. So if you are checking it out, be sure to check it out at Bloomberg.com. Well, coming up in just a few minutes, we are talking the latest with Wall Street reporter Sonali Basak on Goldman's $2.24 billion buy now, pay later acquisition. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleton. Update on Wall Street as we move into the final hour of trading on this Wednesday, September 15th. The Dow, the S&P, NASDAQ all rallying at or near session highs right now. Right to the numbers. We'll tell you why in a moment. With the S&P up 32 now, a gain of 0.7%. The Dow's up 210, up 0.6. NASDAQ up 102, higher by 0.7%. Stocks rose to session highs as the concern that has weighed on investor sentiment about a slowdown in economic growth eases. 10-year down 5/30 seconds. 10-year yield now 1.30%. Energy shares leading the S&P 500 into positive territory for only the second time in 8 trading sessions. Among today's standouts, shares of Diamondback Energy up 7.7% and Marathon Oil Corp up by 7%. Among some of the other oil names, ExxonMobil up 2.9%, BP up 4.3%, Chevron up 1.8%, EOG Resources up 7.7%. A Bloomberg exclusive, our David Rubenstein sat down with European Central Bank President Christine Lagarde, and she talked about a number of topics, including cryptocurrencies.
Cryptos are not currencies, full stop. Cryptos are highly speculative assets that claim their fame as currency, possibly, but they're not. They are not.
ECB President Christine Lagarde. You can catch the entire interview tonight on Bloomberg Television at 9 p.m. Cisco Systems, the biggest maker of computer networking equipment, is predicting its revenue will grow 5 to 7% over its next 4 fiscal years, outpacing analyst projections. Cisco up now by 0.2%. Again, recapping, stocks are pushing higher. Energy leading the way. S&P up 33, up 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld live in the Bloomberg Interactive Brokers studio. Well, just earlier today, we learned that Goldman Sachs has agreed to buy GreenSky, a buy now, pay later fintech, for about $2.24 billion. It adds to its Marcus consumer banking platform, a company that offers payment plans to customers with home improvement projects or healthcare needs. Joining us now is Shonali Basak, a Wall Street reporter for Bloomberg News. She's with us in the Bloomberg Interactive Brokers studio. Shonali, why GreenSky?
Well, we know that Goldman has been looking to really expand its consumer business. And the big question was, were they going to buy a company to do it? How would they do it organically? Looks like a little bit of both. This gives them a lot of scale, many customers immediately, younger customers in particular, thousands of employees in Atlanta, a place that they really want to expand in apparently. And as you see them really start to physically put more employees on the ground where they want to reach their clients.
Well, earlier today, you spoke with Goldman Sachs Global Co-Head of Consumer and Wealth Management, Stephanie Cohen, to chat all about the deal. Let's take a listen to part of that interview.
If you look at our overall consumer business, the idea is for us to help these tens of millions of customers achieve their financial goals. And I've said this before, we're going to do that through Marcus by Goldman Sachs, where people will come directly to the Marcus app or the Marcus website. But we also believe that people don't always want to go to their bank. They want their bank to come to them. They want to experience financial services and ecosystems that they love and trust and be where they transact. So in some cases, we're doing that with people like Apple and General Motors, people who are in their car or using their iPhone. But we'll also do that when people are now in their homes and they're getting a new set of windows or a new roof. They'll be able to experience the Marcus product set in that environment. They'll be able to not only buy products that help them improve their homes, but over time they'll be able to get holistic products that help them better manage their financial lives. So again, the point of sale capability kind of perfectly fits into that overall strategy that you laid out.
And how does this fit into the world of fintech? Is it an indication that the big banks are willing to buy more fintech firms, work with them more closely? Are you becoming more of a fintech?
Yeah, I think if you look at what we're doing at Marcus by Goldman Sachs and the broader consumer business inside of Goldman Sachs. So we think we're doing is really different than others. We think we're the best of both. We have been around as Goldman Sachs for over 150 years. We have a greater than $1 trillion balance sheet. We have really deep experience in risk and regulatory and compliance, but we started with a clean sheet of paper, and so we're able to move really rapidly and build great technology that allows us to better serve our customers. So for Goldman Sachs, I think from the very beginning, we've been working with and partnering with FinTech, and I think it's just another continuation of that. But I do think the transaction is this perfect explanation of how if you bring that large balance sheet and know-how in the financial services sector with new technology, you can really do something different. Green Sky's business focuses on the home improvement space, and in the home improvement space, obviously the customer is a very high quality, given they own a home. But on top of that, it's really a large ticket size, and when you're doing large ticket size financing, having balance sheet and scale really matters. So I think this transaction in particular shows that if you bring amazing cloud-based technology together with the scale of a really large financial institution, you can do amazing things, not just for customers, but for the merchants.
And what does this say about Goldman's larger ambitions to be also a Main Street bank?
Yeah, we're highly committed to the consumer business. As I said before, we believe we've had great progress over the last 5 years. 8 million customers, $100 billion in deposits, $9 billion in loans is a really large business, but we're just getting started. And I think this transaction shows how committed we are to growing the business, but also helping those tens of millions of customers live better financial lives, take control of their financial lives, and be able to serve them with real Goldman Sachs products.
Well, there you have it. Goldman Sachs Global Co-Head of Consumer and Wealth Management, Stephanie Cohen, talking to our own Bloomberg News Wall Street reporter, Shonali Bassick.
And Shonali, we heard Stephanie mention Apple, and Bloomberg had reported in July that Goldman and Apple are working together on a buy now, pay later program. Obviously now Goldman is buying Green Sky. What is this building towards for Goldman? Is it that consumer bank vision?
It certainly is, and we're seeing that consumer bank build up in a lot of ways. When we think about Goldman, its relationship to Apple, its relationship to GM, we've reported, according to people familiar with the matter, that they're working with Apple for a buy now, pay later type service. Meanwhile, Green Sky provides financing for 4 million customers, 10,000 merchants. As you heard Stephanie say, big ticket financing for home improvement projects. You see different types of lending products really evolving at Goldman Sachs. They've been adding a lot of products. They've also added an invest product recently. We've known much about Marcus already. You've seen, probably anyone with the Marcus account has seen those, the promotional CDs lately as well. So you see them attracting a lot of customers this way. We have seen growth in the consumer business during earnings regularly. They are much smaller than a Bank of America and JP Morgan still.
Shonali, well, to that end, what are Goldman Sachs' ambitions for Marcus? What do they want it to be?
It's interesting. I would love to hear new targets soon and I think a lot of people
because they've been working on this a long time.
They have been, but it has grown very quickly in a short amount of time. Something interesting that Goldman is doing is, we mentioned Apple, we mentioned GM. Part of the poll here is Goldman has, they're the number one investment bank in the world. They have more corporate clients than any business in the world, which means that they can work with those clients as well and create solutions for their employees. Those businesses have tons and tons of employees. So that's part of the appeal that Goldman is making here, to really make the businesses work across businesses.
And Shonali, really quickly, how do you think, Bank of America, JP Morgan executives are watching this unfold? Do you think that we might see them try to beef up in response?
Maybe more fintech acquisitions. I definitely see that being a possibility, especially as you see, this was a $2.2 billion deal. It wasn't a humongous deal, but it was sizable and it added scale quickly. So more of these types of deals can be expected.
Shares of Green Sky, by the way, higher by 53.2%.
Goldman down
the news
today.
Interesting.
Goldman slightly down.
All right. And we do have about 51 minutes left on the trading day. Shonali Bassick, Wall Street reporter for Bloomberg News. She's with us in the Bloomberg Interactive Broker Studio in New York. You can follow her on Twitter at Shonali Bassick. Again, Goldman Sachs agreeing to buy Green Sky for $2.24 billion for payment plans. Let's head down to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey there, Nancy.
Hey Hey, Tim. For a while in August, there were more people receiving a COVID-19 vaccine, but that trend apparently was fleeting, with the number now declining again, especially in the South and Central U.S. Some health officials say the mandate for federal employees and healthcare workers causes more fear for rural Americans who do not want the federal government telling them what to do. It shows the challenge that President Biden's administration faces in getting more Americans to get a shot. One of the leading COVID vaccine makers is now making the case for boosters. Bloomberg's Nathan Hager reports.
Pfizer says the efficacy of its COVID vaccine does appear to wane over time, and it says a third dose is safe and effective against the virus and new variants. Pfizer says this is based on real-world data from the U.S. and Israel that suggest breakthrough infections are rising more quickly in people who were vaccinated earlier. The drug maker will present this data to a panel of outside advisors to the Food and Drug Administration on Friday. That panel is expected to recommend whether booster shots should be approved in this country. In Washington, I'm Nathan Hager, Bloomberg Radio.
SpaceX is set to make history tonight with the first all-civilian crew to be launched into orbit. Lisa Rich is founder and COO of Explore and says the flight is groundbreaking.
They're going to have this unbelievable experience of flying in space and being in orbit, and it's going to be extraordinary. This is a moment for commercial space. It's opening up access.
Rich tells Bloomberg it shows that a commercial company can design a mission for its own purposes. That mission is to raise $200 million for St. Jude Children's Hospital. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons, Tim Stenevec, and Katie Greifeld live in the Bloomberg Interactive Brokers studio in New York. So, Katie, I'm using my Bloomberg terminal to type in the S&P 500 and find the latest on what stocks are moving there. A really interesting story playing out in the S&P 500 right now, kind of similar, at least on the downside, to what we saw yesterday. Among the worst performing stocks in the S&P 500, Wynn Resorts down more than 7% today. We're also seeing Las Vegas Sands down 2%. MGM is also lower on the day. These companies all down for a second day in a row. Biggest two-day decline for Wynn since the start of lockdown, all because of China's casino crackdown.
Yeah, and it's unclear when exactly the pain will stop, what will resolve this tumble for these big casino names. And Tim, like you taught me yesterday, you can find on the Bloomberg terminal how much of their revenue comes just from Macau. And I mean, for companies like Wynn, it's close to 50%. So this is just a huge blow to the fundamentals of some of these businesses.
Yeah, Macau saying that officials in the Asian gaming hub are interested in tightening restrictions on operators, and the sell-off continuing into today. It started in Asia, where Macau's top gaming stocks listed in Hong Kong lost a record $18.4 billion in combined market value. Officials said that changes to casino regulations would include appointing government representatives to, quote, supervise companies in the world's biggest gaming hub.
Yeah, and this is just part of a trend that we've seen coming from China over the past few months, just this broad-based crackdown across sectors. It started with tech, it turned to online games. Now we're seeing physical gaming too coming under fire. And the Bloomberg Intelligence is Brian Egger. He had a really interesting note out saying that actually the Wynn and the Sand sell-offs, they might be justified just based on a possible worst case outcome here.
That's really interesting. We're also seeing shares of Starbucks falling nearly 5% after Yum China gives a disappointing business update. So China, a real center of a lot of stories playing out in the market today. This is Bloomberg Radio, and this is Bloomberg Business.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Best level of the day for the U.S. stock market. This update brought to you by SEI. Today's competitive marketplace requires asset managers to become more operationally adept. See how you can transform your business with SEI's global platform at SEIC.com/IMS. The Dow, the S&P, NASDAQ all rallying. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading in the green today, with the Dow currently up 269 points. S&Ps are higher by 41. NASDAQ is higher by 128. The U.S. 10-year yield hits 1.3%. Gold is down 12. Transports rise 126. And Bitcoin is up by 2.6%. Among the main 11 S&P sectors, only utilities were in the red. And leaders to the upside in the Dow, Walgreens, Chevron, and Microsoft, while Nike and Goldman Sachs led to the downside. In deal news, Goldman Sachs to buy specialty lender GreenSky for $2.2 billion. And in other news, Amazon is planning a beauty products event in October that sent Ulta Beauty stock down intraday. Wrapping things up, Cisco dropped intraday after giving a sales growth update. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal, I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Tim Stenevec and Katie Greifeld live in the Bloomberg Interactive Broker Studio in New York. Well, a SpaceX rocket is set to launch 4 civilians into orbit for a 3-day voyage circling Earth. This is a new milestone in Elon Musk's quest to send everyday people to the cosmos, eventually establishing a colony on Mars. Let's go now to Ed Ludlow, our West Coast correspondent, who's currently on the Space Coast, joining us from the Kennedy Space Center in Florida. Ed, give us a lay of the land at the Kennedy Space Center right now in Cape Canaveral. What are things like?
It's interesting.
SpaceX
it's interesting
is set to
because
launch.
I think the media are more tense than the crew themselves. We had this press conference last night, and the 4 of them are sitting there and just impossibly calm, given that these are civilians, right? And define civilian basically as a non-professional astronaut. They've gone through 5 months of relatively intense training with SpaceX, everything you'd expect from G-force simulation to literal virtual simulation of what to react to inside of the Dragon capsule if something goes wrong. And as they sat there, they were calm, and they reflected on what this mission means to them, as well as acknowledged some of the risks that go with it too.
So, Ed, the fact that there's no professional, no NASA-trained astronauts on board, that makes me a little nervous, because this flight is a little bit different than what we saw with Blue Origin and Virgin Galactic, right? This flight is actually going into orbit, correct?
It is completely different. It is a completely different ball game. So the first thing, Bezos, as a yardstick, went to 65 miles above the Earth. That is, beyond the official boundary of space, but still regarded as suborbital. This crew will go to 360 miles. It's just an order of magnitude greater. And that brings with it additional risk, space debris. The Dragon capsule will go higher than the International Space Station, or at a further orbital apogee than the International Space Station, is even higher than the Hubble telescope, right? So there was a lot of debate around this, and I actually asked the mission commander, Jared Isaacman, yesterday about this, why he wanted to do it. And his point was, the ultimate goal of SpaceX, right, is to make humankind an interplanetary species. And so in order to actually make progress, do something that's not yet done before, that's why they wanted to go to 360 miles. SpaceX has sent people to the International Space Station and back, right? They wanted to go beyond that.
I'm wondering about Jared Isaacman, because you called him, what did you refer to him as? Mission Commander?
Mission Commander.
How does he become Mission Commander? He's a technology billionaire, 38 years old. He, along with 3 others, are going into orbit.
Yeah, so he's the CEO of Shift 4 Payments. That's his day job. And in his spare time, he is this adventurer and qualified pilot. He is qualified to fly multiple classes of aircraft, including jet fighters. And he is also the benefactor of this mission. We don't know how much he's paying SpaceX for it. He's said, or it's been reported, that it was less than $200 million. And so, he basically in some discussions with SpaceX sometime a year ago, floated the idea, and SpaceX said, we're closer than you might think to taking to into space, and he is the mission commander. In the event that something goes wrong, he, along with Sam Proctor, who is the pilot, quote-unquote pilot of the mission, will have to react. And in the event that the capsule, which is designed to be fully autonomous, as you guys know, they lose communication or something goes wrong in an emergency, that is what they've been training for. They've been training to react and running through drills to react to whatever it is that happens.
Wow. Well, someone would have to pay me $200 million to get into space. But Ed, I want to talk about who's not on board, Elon Musk. Is that surprising at all?
I don't know that it's surprising. I think Tim and I have discussed this in the past, that Elon Musk has this classic line that he always says when asked, which is he would rather die on Mars than on impact, which I think by that he means, he wants to know that the technology has taken that full leap to take humans to another planet and then done it successfully before he does it himself. But really, it's hard to say. This isn't really about Elon Musk. He wasn't at the press conference last night. He's tweeted messages of support. He, took part in that Netflix documentary, which tracked the progress of the crew over the last 5 months, but in a very minimal way. And he has kind of taken a back seat, and other SpaceX personnel have taken a step forward in terms of their profile for this mission.
Hey, Ed, I'm wondering about what we can see from this launch. Tell us about how we can tune in and to what extent we're going to be able to follow the journey as it gets more than 300 miles above the Earth's surface.
Well, I have some good news for you, Tim, because
can I watch it?
On Bloomberg Television and Quick Take at 8 p.m. Eastern Time, actually just a little before 8 p.m. Eastern Time. It's interesting because Netflix are also carrying it as part of this deal they made for the documentary series. And for those of the audience listening out there that have watched the crew missions that SpaceX has done to ferry astronauts to and from the International Space Station, the initial sort of 10 minutes from liftoff through to entering or exiting Earth's atmosphere and into orbit is very similar. It's just that rather than taking a trajectory or path to the ISS, they're taking a different path to an orbital apogee of 360 miles. And then they will orbit the Earth for 3 days approximately. And they have multiple options for where they can land off the Atlantic, off the coast of Florida, sometime around Saturday or Sunday. So, it's going to be really interesting. There is a camera inside the capsule, and we're waiting to get some images of that as well.
Well, we cannot wait to check it out on Bloomberg TV. Bloomberg Radio will also have complete coverage of the SpaceX launch tonight at 8 p.m. Wall Street time. Ed Ludlow, West Coast correspondent at Cape Canaveral at the Kennedy Space Center. Thank you so much for taking the time. This is Bloomberg Radio, and this is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec and Katie Greifeld live in the Bloomberg Interactive Broker Studio in New York. It's just after 3:30 on Wall Street, and that means it's time for the chart of the day, the stock of the day, and of course the song of the day. A great subject line to Dave Wilson's email: how the S&P 500 turned $10,000 into $78,000 or $3 million. Want to know more? Well, stay tuned. In the meantime, let's head to Charlie Pellet for a check of the trading day. Hey, Charlie.
Well, hello there, Tim and Katie. We are higher across the board now. We've got 28 minutes to go ahead of the closing bell. Do want to begin with Blue Apron Holdings that has resumed trading. Shares of APRN on the ticker. They're up now by 31% after reporting $78 million of a planned equity capital raise. Matthew Salzberg, the company's co-founder and board chair, and Barry Salzberg have resigned. Shares are jumping right now again. Apron up by 30.5%. Stocks at session highs as the concern that has weighed on investor sentiment about a slowdown in economic growth eases. Crude oil is jumping. Bond yields are rising. S&P up 40 now, a gain of 0.9%. Best level of the day with just about 28 minutes to go. The Dow up 266, up 0.8%. NASDAQ up 122, up 0.8%. 10-year yield 1.30%. Crude oil, a major story helping drive today's gains. West Texas Intermediate crude up 3.1%, 72.63 a barrel. Spot gold down 0.6%, 17.93 the ounce. Bitcoin 48,062. Bitcoin today up 2.6%. COVID-19 deaths and cases in the U.S. have climbed back to levels not seen since last winter. Dr. Bhakti Hansati is Associate Professor of Emergency Medicine at the Johns Hopkins Bloomberg School of Public Health. She is in the trenches and says there's no question hospitals are feeling the pain.
I'm going to be working the overnight tomorrow night. I was at work the overnight last week. My hospitals are full. Many hospitals are on diversion, which is where the hospital says, we have no capacity, please find somewhere else to receive care. There's long wait times to the ICU. And the challenge that we're going to face is, as the COVID-19 cases continue to be a recent high, we are now about to face a flu surge as well.
Dr. Hansati with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Pfizer shares among some of the vaccine names that we follow up 0.3%. Its German partner BioNTech, its ADR is up 5.5% today. AstraZeneca's ADR is up 0.9%. Moderna up by 1.1%. J&J Johnson & Johnson up 0.4%. Recapping a rally underway. S&P up 40 now, up 0.9. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Bloomberg.
Good. And the artist?
Aretha.
Thank you.
Aretha Franklin.
It's the greatest song ever.
Wow.
According to Rolling Stone. They just came out with an updated list of the 500 best songs of all time.
Okay.
And Respect was #1.
Do you agree?
It's hard to argue the point. I mean, it is a great version. And I say a version because originally it was done by Otis Redding. He wrote it. But Aretha Franklin made it a hit, and she brought something to it that Otis didn't. Let's just put it that way.
Dave, so rarely do you have a song of the day that's not necessarily connected with the chart of the day.
But this is one of those examples.
Is it?
Yeah, you got to have respect for how the stock market performs. Okay, you want to put it that way? We can do that. You know, and it's something that...
That works. That works.
All right. But what we're looking at here in this chart is based on data that Barry Bannister over at Stifel compiled. He's their head of institutional equity strategy, and he kind of puts some numbers to the old saying, sell in May and go away, in a sense. Looking at the 6 months, between May and October, traditionally a weak period for stocks, and then the following 6 months. But starting back in 1950 with a $10,000 one-time investment, a lump sum, just so you would get an idea of what you would end up with 7 decades later, depending on whether you invested during the May through October period or the November through April period. And you were talking about those numbers, Tim, a few moments ago. Sure, $10,000 turned into $78,000, roughly speaking, if you invested in May through October. But as far as November through April goes, about $3 million. So you really do get a sense of how much of a seasonal effect there has been in U.S. stocks over time. But there's one more point that needs to be made, as Bannister did in a footnote to his chart. Well, he had a table. I have a chart. In any case, if you had kept your money in the S&P 500 the whole time, as opposed to just 6 months here and 6 months there, you would have ended up with about $25 million for that $10,000 investment. Now, this is all based on total returns, right? So you're figuring in dividends, reinvested into the index, and that's where these numbers come from. In any case, if you want to see the results, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Okay, so the title of your chart is Bring on November. S&P 500 is far more rewarding in 6 months through April than in May through October. Right. November Rain, you could have done? Guns N' Roses?
Yeah, but,
right?
I mean, our producer, Paul Brennan, suggests that problem is November Rain is a depressing kind of song, okay? And November you want to look forward to with optimism, at least based on the historical track record. So instead, we went with respect.
I have respect.
Bit of
for
a
that.
news element there, too.
Yeah, and I like the Rolling Stone connection as well. Dave, give us your stock of the day.
It's BTRS Holdings. It's the parent company of an outfit called Billtrust that does financial software for business. And the ticker on this one, no surprise, BTRS. The shares had fallen 7 days in a row going into today. And toward the end of that streak, some of the company's top executives were doing some buying. We found out late yesterday that the CEO had bought $1 million of shares Monday and Tuesday, that the chief financial officer had bought $300,000 worth of shares in the same period. Oh, and the day before, the chief information officer disclosed a purchase of about $500,000 of stock. Insider buying gets people's attention. Put it all together, you've got BTRS at the moment higher by about 12.5%.
Check out Dave's Stock of the Day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter @TheOneDave. Dave Wilson, Stocks Editor. Thanks, Dave. Let's get down to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Hey, Tim. President Biden says he has great confidence in Joint Chiefs Chairman Mark Milley. Biden was asked about it following revelations in Bob Woodward and Robert Costa's new book, Peril, that Milley took measures to ensure that former President Trump could not instigate a nuclear strike on his watch. White House Press Secretary Jen Psaki.
This president, this current president, who follows the Constitution, who's not fomenting an insurrection, who follows the rule of law, has complete confidence in Chairman Milley and him continuing to serve in his role.
Psaki says Milley was not alone in questioning Trump's stability following the 2020 election. Milley said today that he contacted his Chinese counterpart to avoid misunderstandings and conflict. Members of the Senate Judiciary Committee are denouncing the FBI for botching the investigation of USA Gymnastics doctor Larry Nassar. Today, they heard from some of Nassar's victims.
To be clear,
world champion gymnast Simone Biles relived her experience.
take your time. To be clear, I blame Larry Nassar, and I also blame an entire system that enabled and perpetrated his abuse.
Michaela Maroney then described in detail what happened to her as a teenager, how she told it all to FBI agents, who then falsified their belated report. In Washington, Irv Chapman, Bloomberg Radio.
It looks like the weather will cooperate for tonight's historic SpaceX launch in Florida with an all-civilian crew. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
Thank you so much for that update, Nancy Lyons. Tim Stenevec and Katie Greifeld in the Bloomberg Interactive Broker Studio in New York. A lot of crypto news, Katie, and I know that you watch it very closely. This time we're talking about Steve Cohen throwing himself into crypto after some early doubts.
Yeah, it's interesting. I feel like he is one of several high-profile names who were initially very, very skeptical on crypto.
Why are you laughing?
Just because, again, you've seen so many people do an about-face. I mean, Jamie Dimon obviously comes to mind. And now Steve Cohen really going all in on crypto. I mean, this week he announced he was investing in a quantitative trading firm for digital assets. Also, his private family office, Cohen Private Ventures, it invested in the 50 million Series A funding round for a company that would help fans buy and sell NFTs. So, he's not just going in on Bitcoin, he's going into the fringes of crypto as well.
You didn't already say this, right? Quote, cryptomaniac?
Cryptomaniac. I was saving that for you.
I thought that's why you were laughing. So check out the story. It's by our own Annie Massa and Catherine Burton. It's available in the Bloomberg terminal. Part of the reason he changed his mind is because of his son, whom he called a, quote, cryptomaniac. Here's what he said, according to a person with knowledge of his remarks. He said this at the SALT conference. Quote, he really convinced me that this was something I needed to do. Once I decided there were opportunities and I thought this could be a space like the internet, it could be incredibly transformational, I wasn't going to miss this. That was in a discussion in New York titled Generating Alpha in Markets and Baseball. He is, of course, the owner of the New York Mets, along with being the founder of Point72 Asset Management.
And obviously, it's interesting to see this news because just this week, we've been reminded that crypto is still the Wild West. I mean, today, OpenSea, it's a marketplace for NFTs. It said actually maybe one of its employees was maybe doing some light insider trading, buying NFTs that they knew were going to be featured on the homepage. So it's still a space that really is not regulated.
Yeah, perhaps that's why Elizabeth Warren calls it the Wild West. And we'll see what regulation comes around. This is Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell at session highs. Once again, the Dow, the S&P, NASDAQ all rallying as the concern that has weighed on investor sentiment about a slowdown in economic growth eases. Crude oil is jumping, bond yields rising. Right now, we've got the 10-year yielding 1.30%. West Texas Intermediate crude up 3.1%, driving energy stocks higher. WTI now at $72.67 a barrel. Natural gas surging as well. Natural gas up by 3.8% per million BTUs at 545. The Dow up 275 now, up 0.8. S&P up 42, up 1%. NASDAQ up 133. That is a gain of 1%. Gold down 0.6%, $17.94 the ounce. Couple of very high-flying IPOs today. First day out for Dutch Brothers. It is an Oregon-based coffee retailer, a coffee chain, and we're seeing its shares perking higher now. We've got that stock up by 66%. And Swiss running shoemaker On Holding, whose proprietary cushioning technology has attracted tennis legend Roger Federer as an investor, now up by 46% on its first day of trading here in New York. Again, recapping, S&P up 42, up 0.9. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. It's 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. At the Federal Reserve's policy meeting next week, officials will debate paring back their COVID-related bond buying program. The smart thing would be to begin tapering soon. The Fed now has to contend with two dangers. The first is that the economy might stall, necessitating more demand-side support. The other is that accelerating inflation could prove difficult to reverse. Even though consumer prices rose a modest 0.3% in August, this second danger shouldn't be underestimated. The central bank can't just wait until inflation is a problem and then act. At that point, it may be too late. That's why the Fed should taper sooner rather than later so it can start raising rates if need be. The bond buying program has been useful, but the balance of costs and benefits has changed. The Fed should act accordingly. This editorial was written by the Bloomberg editorial board. I'm David Shipley. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Yes, indeed. Time for the drive to the close. Just about 9 minutes away from the close of trading. Here on this Wednesday, September 15th, stocks ticking higher late in the day. The S&P 500 higher by more than 0.9%. The NASDAQ higher by close to 0.9%. The Dow higher by close to 0.8%. Let's get into it with Doug Ramsey, Chief Investment Officer at the Luthold Group. He joins us on the phone from Minneapolis. Doug, great to have you on the show. Quite a reversal from what we've seen over the past few days. What's changing sentiment?
It wouldn't surprise me if it's this stream of a little bit weaker economic news. We've written a lot about this idea of looking at liquidity and money growth, not just in and of itself, but relative to the rate of economic expansion. And we had a hotter economy based on nominal GDP growth in the second quarter. It grew almost 17% annualized. Nominal GDP did. And forecasts are really coming down. So if you think about it in terms of like excess liquidity available for the financial markets, we've still got money supply growth, low double digits, 12, 13%. And now you have this slowdown in GDP.
which could be just temporary, and of course that pushes out the expectation for any eventual Fed taper. So we're sort of back to this traditionally mid-cycle idea that weaker is better for the financial markets. That's my guess. It's just one day's action.
Yes, I know. Important context. It is just one day's action, but it does seem, Katie, that's quite different than the sentiment that we've been hearing over the last few days.
Absolutely. And Doug, you set the scene really nicely that we have seen really, really hot economic growth coming out of the pandemic. And like you said, we have seen forecasts across the street come down when it comes to the pace of GDP growth. I'm curious what you think that means for the return profile of the financial markets, of equity markets, maybe beyond just one day.
Boy, that linkage to me is more tenuous than
But
any
I got
time
there.
I can remember in my lifetime. I mean, sometimes I've joked at our asset allocation meetings, it's like, even if I had a perfect economic forecast for the next 6 to 9 months in my hands, I'm not sure what I'd do with it. And I'm not being facetious. I mean, I look at all of the big ticket items we've pulled forward into 2021, starting with Pelotons. It turns out that, well, there's limited demand for Pelotons at the old price. But RVs, boats, second homes, a lot of that was pulled forward. I mean, people had more time on their hands, right? They had one-time payments, some extra assistance, massive extra assistance from the government. But that stimulus is being withdrawn. So it wouldn't surprise me that somewhere in here in the next 2, 3, 4 quarters, we actually had like a single down quarter of real GDP growth. The old official definition of a recession would be 2 consecutive quarters. I mean, I don't foresee that, but just given the current level of involvement of the government in the U.S. economy, I think it's very hard to forecast not just this sort of quarter-to-quarter path on the economy, but also the financial market response. Because who knows, if we did get a weak quarter, a negative quarter, that might forestall any talk of tapering for several more months on end. So it's very difficult, to forecast the economy because of government intrusion in the economy, and it's difficult to forecast the market response, really because of the same thing, what the Fed may and the Treasury may do. Because effectively, to me, those two entities merged in the spring of 2020, the Fed and the Treasury.
Well, look, Doug, you are a little more pessimistic than some of the other folks we talked to. I think it's fair to say. You argue that large caps in the U.S. are very close to their 1999-2000 technology bubble peak on a valuation basis, while the rest of the market is far more expensive than at any point during the tech bubble, and that based on these valuations, you guys have a pretty bleak return expectation for the next 3 to 5 years. So what are the moves strategically that you're making in order to set those expectations?
Well, we do. We have very, very muted return expectations for stocks and bonds over the next, 4 to 5 years, potentially longer, depending on, how this cycle plays out. But that being said, our asset allocation is not purely valuation driven. It's probably set a ceiling on how much we're willing to hold in stocks and in bonds. If bond yields were more attractive at significantly higher levels, rather than using an equity hedge, we'd probably hold more in bonds in our tactical funds than we do. But on the shorter term basis, there's still evidence of this liquidity, and we can just see it through our technical analysis. There have been some internal anomalies developing within the market over the last couple months, but as I sit here today, an obscure index that we like to reference frequently is the Value Line Arithmetic Composite. It's equally weighted, about 1,900 companies. It's only a couple % off its highs as we stand today. So as much as we see some of these anomalies, like a lot of stocks on the NASDAQ, for instance, making new lows, unusually high number considering how well the NASDAQ has done, that's an oddity. But still, if the market were truly narrowing and if liquidity available for the stock market were really drawing down, we should see a much weaker tape internally than we're seeing today. So, it's a little bit of this, it's an old saw in the market, which is be long, but watch the ticks. That's what we're doing, but just from a lower invested base than most tactical asset allocators who feel the need really to be dancing while the music seems to still be playing.
Well, it's still certainly playing today. Doug Ramsey, we certainly appreciate you joining us. He's Chief Investment Officer at the Luthold Group, joining us on the phone from Minneapolis. We are just a couple of minutes away from the close of trading on September 15th, this Wednesday, September 15th, 2021. Stocks off of their session highs, but gaining some steam late in the day. The S&P 500 higher by more than 0.8%. The NASDAQ higher by close to 0.8%. The Dow higher by 0.7%. Coming up next, it's Bloomberg Beyond the Bell, our cross-platform coverage of the market close with our colleagues from Bloomberg Television. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market.
Okay, traders, as you can see, position is closed on euro. We made another profit on euro, 5 pips equals 500 pounds. Okay, well done, guys. It took us quite a while, about 4 hours, until we closed position. As you can see, we placed order and the pair was executed at 4 o'clock. Right now, 5 hours. It took us 5 hours. As you can see, it developed. Looks like cup and candle if it will reach 118.19. Anyway, we closed our position at this level. Well done, guys. If you followed, if you copied this trade, you made a profit as well. I'll speak to you tomorrow. Have a great evening. Today was quite a good, profitable day for us, for you as well, for all of you guys who copied our trades. And let's see, market never sleeps, so what's this night, what tomorrow will bring us. Stay safe.
We had been seeing that we'd open higher and then sort of bleed into the close. Not so much today.
Taylor's been all over that 50-day moving average today as well. Great charting throughout. But Katie, is it the retail buyers who are buying this dip? Who is it that comes in at the 50-day moving average support level?
That's a great question. And from what we can tell, it's probably institutional. Maybe you don't have retail buyers really focusing on the technicals as much. But again, it feels like institutions have been relying on the retail traders to really come in over the past year.
Yeah, and there's definitely a little bit of cover action going on here for some folks, sort of wait for that first flank and then follow them behind here. You're looking at the Dow Jones Industrial Average, 34,800 and change here. That's up about 237 points or 0.7%. S&P 500 looks like it's going to finish higher by about 38 points or 0.9%, while the NASDAQ Composite up about 0.8%, 123 points. The Russell 2000, that's actually your outperformer on the day. It's sitting right now right at around 2234 and change. That's higher by about 24 points or about 1.1%.
So here we are about halfway through September. Well, September 15th, exactly halfway through. And the narrative that has emerged up till now, well, it has been that it's been a gloomy September for stocks, but after a rally like today, Taylor, we're off of month to date, down only 0.9% on the S&P 500.
You know, Tim, and what is so interesting is I stood here yesterday and said that even the positive sectors had a lot of red in them. Today, even the negative sectors have a lot of green in them. For our radio audiences, we do every day, the sector winners and the sector losers, and it is green across the screen, and it's an exact reversal of yesterday. Katie, when we're really talking about this reflationary trade, it's energy, it's autos, it's banks, it's software, it's materials. Does that not sound reflationary, inflationary to you? You're up anywhere from 1 to 3.75%. For the radio audience, only 4 sectors in the negative, though the losses are really light. You're only off 0.3%. It's utilities, it's services. You'd sort of expect that on a day when yields are modestly higher.
Well, Taylor, that green on the screen, it made it really easy to find gainers today. And I want to start with Green Sky. This is a buy now, pay later company. Banks use their technology to provide loans to their consumers. And we learned today that Goldman is going to buy it for $2.2 billion. That helped the stock close up about 50%, adding to Goldman's consumer banking platform. Traders clearly cheering that news. Moving on, we have Dutch Bros. This is an Oregon-based coffee chain. It went public today, and the IPO was priced at $23. The stock opened at $32.50 per share, and it closed at just under $37. So that is a 13% pop just on day one.
Have you ever been into one of these Dutch brothers?
I would love to.
Yeah.
I mean, just based on
Yeah,
how excited traders were about it, must be pretty good. I'm mostly a Starbucks gal.
It's
so.
like, they got broistas there.
Broistas. Yeah, I don't know. Maybe
I think
it's
they're
not
only
the
on the
place
West
for me
Coast,
then.
so I don't know if they're out east here.
Yeah, they are Oregon-based. Probably, I mean, we'll see. They just made a ton of money, so maybe they're going to expand. But Blue Apron, I want to finish on that because there was a lot of news out of this meal kit company today. We learned this afternoon that the company's co-founder and board chair, they're both resigning, but we also learned that the company is planning a $78 million capital raise. That helped the stock close about 30% higher. Actually, even more. It really spiked at the close.
45%,
Yeah, wow, what a day for this company. But I will note that Blue Apron, it's still down about 9-10% this year, Tim.
Yeah, and it now has a whopping market cap of about $132 million. That's what the M gave.
Certainly a far
Still
cry
small.
from when it IPO'd.
All right, let's get over to the math whiz.
All right. Well, here I am with the decliners. Wynn Resorts and Casinos closing down 6.3% to the lowest since November 2020. U.S. casino firms that operate in Macau are still under pressure for a second day in a row after officials there said they would tighten restrictions on operators. In fact, every one of my decliners is really a China story playing out. We're seeing that happen with Las Vegas Sands as well, finishing the day down by 1.7%. It did fall as much as 6.6%, Caroline, earlier in the day. And then Starbucks also falling 3.55%. Shares did fall nearly 5% earlier. This is a story about Yum China and Starbucks falling in sympathy with Yum after Yum China gave a disappointing business update.
Yeah, everything really there, a story of US-China.
Yeah.
Meanwhile, let's go across to the commodity spectrum, to the FX spectrum, and really everything points to a day that was just on a tear for certain parts of the commodities market. Oil up more than 3%. That we're seeing this continued rise up as inventories came in much lower than expected, a surprising drop off there. So oil pushes higher, even though we know that China in some ways could be adding to production at some point. People on tenterhooks about that. But for now, WTI crude at $72.65. Natural gas again, 7-year high, $5.46. I mean, just continuing to ramp up higher as we worried about some of the underlying production for natural gas. I mean, absolutely parabolic moves that you're seeing over in Europe as well. We're seeing steel on the higher side. Interesting that iron ore has been on the downside because of China, of course, and they actually curtailing their steel production, but steel actually managed to push that a little bit higher today. I'm looking at the foreign currency impact of this commodity move because, well, your Norwegian krone, that's what's winning out today. Why? Because it's an oil-based economy, so we're up 0.8%. I'm seeing the Japanese yen seeing a little bit of a push higher, Canadian dollar also because of the key commodity currency. On the dollar, on the downside for once, off by 0.2%. Is it the fact that we had, well, nothing really push off on inflation coming in lower than expected? And sovereign bonds, mixed picture, Taylor. We're seeing Canadian yields push that little bit higher, Aussie yields push that little bit lower. It's completely changed, but what's happened in the U.S.?
Yeah, similar story, Caroline. Yields are rising, though very modestly here across the curve. You're up about 1 basis points on the day, 5s, 10s, and 30s to 80, 130, 186 here on the 30-year bond. And Tim, it's interesting. I came in this morning, read a good statistic. The aggregate of net short non-commercial positions across all Treasury maturities has now increased for 3 straight weeks. You're getting more short positions coming in. So finally seeing a good day when yields are rising, starting to pay off on some of those bets. It is interesting as well, Tim, as we think about where we are coming in with some of the weakness in China overnight, and yet the U.S. data this morning showing much more of a mixed picture.
Yeah, that's right. Empire Manufacturing coming in higher than expectations, sort of working in tandem or conflicting with what we see out of China. We certainly wait till what we get tomorrow when it comes to retail sales, but as far as what we got from China, very, very disappointing read. Growth slowing there for retail sales, 2.5% versus a year ago, much lower than the 7.7% estimate. It shows the issue that we have with the Delta variant in China and the reopening there, and the way that China hasn't been able to get under control.
Yeah, I mean, in the retail sales numbers, I mean, we're going to see a lot of distortion. Obviously, you're expecting a drop there, but of course, that's coming off of a pretty high base that we were dealing with. But it'll be interesting to see sort of what the mix is, guys, because, you know, if it's just people sort of spending on, you know, back to school, back to work stuff, I think maybe that could be a red flag. But if people are still spending on, I guess, the broader basket of things that we've come to see over the last few months, and maybe you take that as a bullish signal. It'll be interesting to see.
That'd be surprising, given the inflation read, given that, you know, clearly prices have been moving, and the fact that demand has perhaps been ebbing when it comes to our desire to travel, when it comes to our desire to want to eat out. Once again, the Delta variant been impacting things there. But we do look ahead to retail sales. Notable that in Europe, it was a woeful day for some of the retailers, largely because H&M and some of the other companies really did underperform, largely because of the Delta variant.
And no surprise here, Tim, but every one of our guests here, at least on TV, on the close, has highlighted some still concerns about the supply chain problems and the impact, of course, that they see impacting the markets. We had a guest talk about some of the ships that are hanging out overseas that are now 50, I think, off the coast of
LA.
of Long Beach.
Yeah.
This one was Long Beach, but yeah, I mean, really highlighting some of the concerns as we head into a peak holiday season.
Yeah, look, it's a story that we've talked about each day. BTIG's downgrade of Nike. I mean, that was a big deal because it's not that consumer demand is actually slowing. It's the concern about supply and whether they can actually reach the supply that consumers want with factory closures in Vietnam and, of course, the container ships that are just taking so much longer to get to the U.S.
And obviously, I mean, we're all aware of the economic implications here. I mean, if companies don't have the widgets they need to make more widgets, they can't sell them. Those are all of the components filtering into retail sales tomorrow. So it's just going to be fascinating to finally get those numbers and parse through them.
So get those widgets for the holiday shopping season
widgets?
early.
It's my favorite word, widgets.
It's all about the metaverse now. Can't you just make more of those?
It is. All right.
Solve all of our problems?
We are going to head to the metaverse. In the meantime, that's going to do it for our cross-platform coverage of Beyond the Bell this afternoon. We're back tomorrow, same time, same place on Bloomberg Radio, Bloomberg TV, and on YouTube.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld live in the Bloomberg Interactive Brokers Studio in New York. An up day across the board. The Dow finishing higher by more than 0.6%, close to 0.7%. The S&P 500 higher by more than 0.8%. We'll go ahead and round that up to 0.9%. The Nasdaq finishing in the green, more than 0.8% as well. Well, coming up in just a few minutes, we are talking all about the environment. Joining us is going to be our friend who wrote a book, and also we are going to be joined by IBM executive talking about cloud computing. In the meantime, let's get a check of world and national news. Nancy Lyons is standing by there in D.C. Hey there, Nance.
Hey, Tim. FBI Director Christopher Wray took plenty of heat today as senators heard how the FBI failed to act on allegations of sexual assault by former USA women's national gymnastics team doctor Larry Nassar. Olympic gymnast Michaela Maroney told lawmakers it took 14 months for agents to act on her allegations.
I thought, given the severity of this situation, that they would act quickly for the sake of protecting other girls. But instead, it took them 14 months to report anything when Larry Nassar, in my opinion, should have been in jail that day.
Wray, who was not FBI director at the time, is promising it will never happen on his watch.
I and my entire senior leadership team are going to make damn sure everybody at the FBI remembers what happened here in heartbreaking detail.
Wray says one of the agents involved no longer works for the Bureau, but Nassar's victims say all the agents involved should be prosecuted. Tonight, a SpaceX rocket is set to launch 4 civilians into orbit for a 3-day voyage circling the Earth. Bloomberg's Ed Ludlow offers details of what they will be experiencing.
They'll be hurtled up towards 360 miles above the Earth, various stages of separation at a speed of 17,500 miles an hour, which for a non-professional astronaut who's only had 5 months of training, quote-unquote training, is quite a significant step.
Ludlow is at the launch site in Florida, where the weather does look good for tonight's launch. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons, Tim Stenovec, and Katie Greifeld live in the Bloomberg Interactive Brokers Studio in New York. Katie, you love a good story about the Federal Reserve, and so do our readers, because among the most read on the Bloomberg Terminal is a story about the fight over who should lead the Federal Reserve for the next 4 years, because it's intensified questions about whether the central bank is doing enough to help combat climate change. The Fed has a dual mandate, right? Stable prices, maximum employment. How does that fit into what the Fed does about climate change?
You know, it's a great question. I would argue that climate change probably falls outside of the realm of monetary policy. And Claudia Sahm would probably agree. She is a former Fed economist. She's a senior fellow at the Jane Family Institute. She has a great quote in this article. She says, "This is not what we should be talking about when we discuss who should be the Fed chair." And she actually says, this is a quote, "It's nonsense to say that the most important institution in fighting climate change is the Fed."
It's really interesting because there has been a broad discussion about what the dual mandate should include and what monetary policy should include, and what role the Fed should take in combating inequality too. And Fed Chair Powell has started talking about inequality, significantly talking about it when it comes to the role the Fed is taking.
Absolutely, because even if the Fed is really focused on inflation, on employment, it's not too tenuous of a bridge to draw that, those policies, they inflate asset prices. We know that it's mostly the wealthy that is involved in the financial markets that can exacerbate economic inequality, wealth inequality. Climate change, though, it's a little questionable.
So a handful of progressive Democrats, including New York Representative Alexandria Ocasio-Cortez, recently called on President Biden to dump Powell and nominate a greener replacement when his 4-year term ends in February. Climate advocacy groups followed that with a petition signed by more than 40,000 people urging Biden to do the same. We should say, though, that Fed Chair Powell enjoys broad support for Republicans and many Democrats for his handling of monetary policy and his response to the pandemic. Check out this story on Bloomberg.com and, of course, on the Bloomberg Terminal. This is Bloomberg Radio, and this is Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. An update on Wall Street. The Dow, the S&P, and NASDAQ all advanced, closing at or near session highs. And this update is brought to you by Withum. More than CPAs, they are trusted advisors offering smart business solutions to help companies innovate, grow, and stay secure in today's complex world. Visit Withum.com for more. General Motors is urging some owners of Chevrolet Bolt electric cars to park and store the vehicles at least 50 feet away from other cars to reduce the risk that a spontaneous fire could spread. GM shares up today by 2.1%. Stocks up the most in almost 3 weeks as the concern that has weighed on investor sentiment about a slowdown in economic growth eases. S&P up 37, up by 0.9%. Dow Industrials up 236, up 0.7. NASDAQ up 123, up by 0.8%. 10-year down 4/32, 10-year yield 1.29%. Spot gold down 0.6%, 17.93 the ounce. And West Texas Intermediate crude up 3.1%, 72.63 a barrel. A couple of high-flying IPOs today. Among them, we had shares of Dutch Brothers, a coffee retailer, up today by 59.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. A hot headline crossing the Bloomberg terminal right now. Corporate tax hike, surtax on wealthy, has been advanced by the House panel. There will be much more on that a little bit later with Joe Matthew, the host of Sound On, starting at 5 p.m. Wall Street time. In the meantime, let's talk a little bit about the hybrid cloud. Today, IBM announced that Caixa Bank, one of Europe's largest banks, it has more than 21 million customers, is using IBM's hybrid cloud to accelerate its digital modernization with regulatory compliance and also with data privacy. Joining us now is Hillary Hunter, Vice President and CTO at IBM Cloud. She joins us on the phone from New York City. Hillary, really great to have you on the show. I want to start with a basic question here, because I was just discussing this with Katie, my co-host. For those of the people who aren't familiar with cloud computing and different definitions of it, give us the definition of hybrid cloud.
Yeah, hybrid cloud is IT that spans from traditional enterprise IT through to private cloud and public cloud. What we mean by hybrid is the ability to combine those on-premises resources with cloud resources in a consistent way, with a consistent set of capabilities, with a consistent set of application behaviors, and with the ability to monitor and secure it in a consistent way across 2 different or 3 different or even 5 or 10 different types of environments.
And so what role does the hybrid cloud play when it comes to, the financial services sector? Why might they be more interested in tapping the hybrid cloud just versus the overall cloud?
Yeah, there's kind of 2 pieces of saying hybrid. One is that, there's a piece that's not in the public cloud, and then there's a piece that's in the public cloud. And I would say there's kind of 2 interesting things here for the financial services sector. The first is that, this is one of the most regulated industries. It's an industry that stewards each of our, consumer data, all this financial information, et cetera. It's a highly regulated industry, for good reason. And therefore, these institutions have to steward their data, their processes, their code base, what they do as a business, particularly carefully. And when modernizing to cloud, you want to be able to adopt the most recent in technologies. You want to be able to use AI to get insights from your data. You want to be able to instantaneously give people an answer on their loan application, not have them wait a day or a week. The purpose of cloud adoption is really to be able to do things faster as a financial services business, and to do things more efficiently and effectively. But sometimes that's best done on premises. Sometimes the data is on premises or needs to be in a particular country or location. Combining that with public cloud technology that also has a strong security and compliance focus gives you the best of both worlds, because you can modernize applications, use the latest in capabilities on premises if the data is there. You can also choose to develop completely new capabilities or to move even core applications into the public cloud if the public cloud is appropriate to financial services use. And that especially happens when we do things like what we do with our cloud for financial services, which Caixa Bank will be using, which has security and compliance built in for this sector.
What about from a compliance perspective, do you have to tackle when it comes to hybrid cloud? Like, are there certain regulations about what type of data can be in the cloud in the European Union and what type of data has to be on premise?
Yeah, so there's not necessarily a regulation specifically about what can be where, but there are regulations about how you protect your data no matter where it is. We've adapted our public cloud technology to enable industry-leading protection of data where we can assure that a bank is the only entity in control of their data, the only entity that has access to it, and our cloud operators, even if asked, can't access the data. And so from that perspective, it enables a bank to have a similar control and level of protection over their data as they would have had on premises. And so it kind of unlocks use of the public cloud also, even for core banking and sensitive data.
And so, Hillary, we've talked a lot about banks, about the financial services industry. What other industries do you see that could also really tap into the hybrid cloud? Where are the opportunities for growth here?
Yeah, we see the hybrid cloud opportunity overall at over $1 trillion. And there's not a whole lot that has migrated to the cloud so far. And there's a lot of workload adoption still to happen, but it's especially in regulated industries where there are challenges. So past financial services, insurance, telco, healthcare, government, that would be kind of the major list of organizations that, we are partnering with and helping through special programs on the cloud to also be able to adopt cloud and to be able to adopt hybrid cloud technologies that enable them to modernize their workloads as quickly as they can in place, and then also extend their footprint and their IT and capabilities by using the public cloud as well.
Is there one industry or one segment that has been slowest to adopt this type of technology? Is it the government?
I think, there's been some debate as to whether or not it's, within government and federal type sectors or financial services, to be completely honest. I think that these sectors, kind of have equal weight of stewardship of important things for us as societies and individuals and consumers. And so, being able to move at pace toward cloud adoption requires picking things like what we refer to as confidential computing technology and other data privacy preserving technologies, requires compliance programs that ensure that the operations are stable, that everything is done in a secure way. And being able to create those in a prescriptive program for these particular regulated industries like cloud for financial services then makes it okay to move forward at that rate and pace that the industry and the sector demands.
Hillary Hunter, Vice President and Chief Technology Officer at IBM Cloud, joining us on the phone from New York City. Hillary, thank you so much for taking the time and joining us on Bloomberg Business Week Radio. This is Bloomberg, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stennebeck and Katie Greifeld in the Bloomberg Interactive Broker Studio in New York. In just a few minutes, we are going to be speaking with Paul Hawken, an environmentalist, an entrepreneur, an author, an activist. He's dedicated his life to environmental sustainability and changing the relationship between business and the environment. He's got a new book out. It's called Regeneration, Ending the Climate Crisis in One Generation, a handbook for what we can do to help solve the climate crisis around the world. In the meantime, let's get a check of the latest when it comes to business news. Here's Charlie Pellet.
Hi, thank you very much. A green environment on Wall Street today. The Dow, the S&P, and NASDAQ all advancing. Stocks up the most in almost 3 weeks as the concern that has weighed on investor sentiment about a slowdown in economic growth eased. Crude oil jumped. Bond yields rose. Crude, a major story today, driving oil shares higher. West Texas Intermediate up 3.1%, up $2.18 a barrel, $72.64 on WTI. Gold down 0.6%, $17.93 the ounce. 10-year yield 1.30%. Equities higher across the board with the S&P up 36, 44.80, higher today by just about 0.9%. Dow Industrials up 236, up 0.7%. Nasdaq up 123. The Nasdaq Composite Index up today by 0.8%. The Dow, the S&P, Nasdaq 100 Index all climbing to just about session highs. For the S&P, by the way, only the second time in 8 trading sessions that the S&P has moved higher. Well, as for the market backdrop and the economic outlook, Doug Ramsey is Chief Investment Officer at Luthor Group. He is our guest right here on Bloomberg Business Week.
Forecasts are really coming down. So if you think about it in terms of like excess liquidity available for the financial markets, we've still got money supply growth, low double digits, 12, 13%. And now you have this slowdown in GDP, which could be just temporary, and of course that pushes out the expectation for any eventual Fed taper.
General Motors urging some owners of Chevrolet Bolt electric cars to park and store the vehicles at least 50 feet away from other cars to reduce the risk that a spontaneous fire could spread. Goldman Sachs buying Green Sky for about $2.24 billion, adding to its Marcus consumer banking platform, a company that offers payment plans to customers with home improvement projects or health care needs. Goldman Sachs shares lower today by 0.4%, but Green Sky surged today by 53.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, Katie, I think a lot of people feel powerless when it comes to addressing the climate crisis. And they do see stories about what's happening to the world, and they say, well, I can try to recycle, I can try to drive less, but ultimately, what can I do? That's something that our next guest, Paul Hawken, tries to address in his latest book, Regeneration, Ending the Climate Crisis in One Generation. Paul Hawken is an environmentalist and an author. He's an entrepreneur. He's an activist. He's dedicated his life to environmental sustainability and changing the relationship between business and the environment. And he joins us now on the phone from the San Francisco Bay Area. Paul, it's really great to have you on the show. Congratulations on your most recent book, Regeneration, Ending the Climate Crisis in One Generation. How do we do it? How do we get to the point where we don't feel powerless?
Well, I think we feel powerless, and thank you very much for inviting me onto the program. We feel powerless because of what is being told to us. And the climate narrative, if we can call it that, has been for quite a long time from the science point of view, which is a future existential threat, and if we don't do this, things are going to get worse. And it's great science, and they've been absolutely spot on in terms of their predictions. And then what happened is that a tactic that was really adopted from tobacco, which was taken up by British Petroleum, and there was individuated the problem, which is that we just drill, oil wells and sell gas. You can calculate your carbon footprint, as if you can solve the problem, And so, yeah, you can drive less, get a bike, recycle, use cold water in your washing machine, put power strips in your home entertainment center. These are some of the solutions that are coming out, And what happened is individuals will listen to that and understand that that made sense. It did lower impact. But unless you had, IQ lower than room temperature, you knew that they were completely inadequate to the task at hand because you're reading the headlines,
Right. It's like sustainability theater, right?
Yeah, it's like, and it makes you feel disempowered. As an individual, go, oh, man, this is worse than I thought. And so, and then people then turn to big government. Government is big by de facto, but I mean government, and just say, well, you should do something, But there's only certain things government can do, and they should, and they're not, and they haven't been. But so I'm for that. But government is the slowest institution to move, not the fastest. And so to look to government to adopt policies, that are complex, but actually would make a difference, is kind of, it's kind of a prayer, a wing and a prayer. And so then people feel like, well, if, they think that the only thing that can happen is between the individual, the individuated individual, he, she, by himself, herself, and then government in its enormity. And what regeneration talks about is actually the gold, the juice is in between those two. It's not the two opposites at all.
And I mean, sustainability theater. I feel frustrated all the time whenever I get a paper straw in a restaurant. I think about all the carbon in the atmosphere. But Paul, I want to ask, where do we go from here? Because at the individual level, there's frustration. Like you say, government can be slow to move. How do we ultimately get started and fix this?
Two things. One is, right now, there's no difference between a climate denier and somebody who understands the problem and does nothing. From the Earth's point of view, they're the same people,
Wow.
And so you have 50% of people who understand it and who are doing nothing. You have 98% of the world is disengaged. And no matter how you see this, you can't read the science and not understand that this is the greatest crisis humanity has ever faced and probably will, when you think about it. And so how do we become disengaged? And that's your question in reverse, which is how do we become engaged? And the way we do it is we talk about it in a very different way. And we talk about possibilities instead of probabilities, number one. Number two, the rhetoric that came out of science, which was good, which is about existential threat, which occasioned fear, activists took that over, got to science, then they blamed, shamed, and pointed fingers and so forth. You're the cause, you're the problem, Exxon, you're it, so forth.
Right.
And then you then communicate to people with fear, threat, shame, blame, finger pointing, and calving glaciers, and
right.
And then you expect them to do something? They're gone. Well, they're off. That channel has been turned off,
Yeah, the engagement element is very important. We're going to talk more about it in just a few minutes. Paul Hawken, sit tight because we're going to be back with you after we do some news. Paul Hawken is environmentalist and author, also the author of his new book, Regeneration, Ending the Climate Crisis in One Generation. Let's head to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey there, Nancy.
Hey, Tim. Star Olympic gymnast Simone Biles is denouncing the FBI for turning a blind eye to the sex abuse she and other young athletes suffered at the hands of former USA gymnastics doctor Larry Nassar. She testified today before a Senate panel urging the prosecution of the agents involved.
To be clear, I blame Larry Nassar, and I also blame an entire system that enabled and perpetrated his abuse.
Biles says it feels like the FBI went out of its way to protect USA Gymnastics. Nassar is serving time on a variety of state and federal charges connected with the abuse. California Governor Gavin Newsom is calling his victory in last night's recall election a win for science, workers, and women. Voters rejected the recall effort by about a 30-point margin. California Congressman John Garamendi says it was clearly a repudiation of Trump supporter and radio talk show host Larry Elder, the leading Republican in the race.
What happened was a total rejection of Trumpism, which could be expected in California, but not by the margin that we've seen. The campaign really came down, do you want Newsom in the job or do you want Trump in the job?
Garamendi tells Bloomberg despite Elder's loss, we can still expect to see Republicans offer up Trump-like candidates in next year's midterms. The list of 12 finalists for this year's Toy Hall of Fame include Cabbage Patch Dolls, American Girl dolls, and the games of Battleship, Risk, and Billiards. Fans are invited to weigh in on a ballot that closes September 22nd. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Tim Stenivek and Katie Greifeld live in the Bloomberg Interactive Broker Studio in New York. Katie, before the pandemic, a lot of offices were building out phone booths. So, with open offices, people would be able to get some privacy when they were taking a phone call that they didn't want, everybody on the floor to hear. Now, according to the Wall Street Journal Dow Jones, Zoom is teaming up with a maker of office phone booths to create Zoom rooms, video conference room booths.
And if you're wondering how this is different from just a conference room, the setup, it should include soundproof walls, a height-adjustable desk, built-in lighting, silent fans to ventilate the space, and an HP Ink computer that comes installed with high-definition webcams. So, maybe we'll see this pick up. Zoom certainly needs a next engine of growth after the pandemic.
Yes, that is the key theme to hit on, I think. By the way, check out this story on the Bloomberg Terminal. It's from Wall Street Journal Dow Jones by Katie Deaton. That's absolutely right, Katie. I mean, the question about Zoom is how much of the demand was, pulled forward, right, during the pandemic, and how much of that growth was pulled forward because of demand for Zoom. And how does it find that next engine for growth? And how does it get people to continue using Zoom and video conferencing when they do head back to the office and perhaps are there on those days that other people are there? I think it's also a story about reopening and, to what extent companies are saying, okay, we want you back 5 days a week, or if you are back in the office, we want you in the office on days when certain other people on your team are there, because it's kind of useless for you to be in the office if other people on your team are working from home, right?
Yeah, theoretically. And I mean, we'll see what it means for Zoom. If we look at their numbers, they reported revenue of just over $1 billion for the quarter that ended in July. That was up 54% from a year earlier. Not so bad, but if you compare that to the previous quarter, that's a slowdown because revenue actually tripled the previous quarter from a year earlier.
I think one challenge they're going to face with these is people going in there and not Zooming, because it sounds kind of nice. Built-in good lighting, silent fans that ventilate, really nice computer, an adjustable desk. And people turn it into their office. Check it out on the terminal. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Energy shares helped push the S&P 500 index up 0.9% today and into positive territory for only the second time in 8 trading sessions. S&P advanced 37 points, stocks up the most in almost 3 weeks, as the concern that has weighed on investor sentiment about a slowdown in economic growth eased. The Dow up 236, up 0.7. NASDAQ up 123, up 0.8. NASDAQ 100 index today up by 0.8% as well. Stocks did close at or near session highs. 10-year down 5/32, 10-year yield 1.30%. Spot gold down 0.6% today. Gold now at $17.93 the ounce. West Texas Intermediate crude, major story today, surging 3.3%, lifting energy shares $72.74 a barrel. Blue Apron Holdings surged by the most since early in the pandemic after the subscription meal kit maker disclosed plans to raise capital and eliminate shares with outsized voting power. Blue Apron up today by 45%. Recapping stocks higher, S&P up 37, up 0.9. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Let's get right back to Paul Hawken, environmentalist and author. He's also the author of Regeneration, Ending the Climate Crisis in One Generation. The book came out yesterday. He's also the author of other books as well. He joins us once again on the phone from San Francisco. Paul, I have the book in my hand right now, and there are a couple things that I notice. One is it's very visually rich. There are lots and lots of photographs, beautiful photographs from all around the world in the book. The other thing that I notice is how collaborative of an approach this book was. The first page is just a list of staff, researchers, contributing writers, essayists, advisors to the book, to the project. Take us through your approach here.
Sure, because most books around climate, whether they're describing the dangers or the solutions, are pretty much somebody saying, look at, I've done the research, I know, you don't, listen up. And you may want to do that, for sure, and so forth. I feel like the conversations we need to have that are constructive are the we talking to we. It's us talking to each other, in other words. And so if we don't have the world inside our organization, inside our board, inside the creation of this thing, then how can we trust ourselves to create a voice that's going to reach as many people as possible? It's a very diverse world now, and so it works better. It's more fun. We have the book. It does have a lot of photographs, and the reason is that goes to a different part of the brain, and it does show things that are quite beautiful. And one of the reasons for that is to try to help people fall in love with the living world, because they've disaggregated climate from the living world. They think it's a thing. It's not a thing. It's part of the biosphere. You hear terms like we're going to fight it and battle it and combat it and mitigate it, and that doesn't work. Nobody wakes up in the morning and says, I can't wait to mitigate today, I mean, and so we're trying to sort of re-knit that together, that sensibility that the climate is not wrong. It is perfect. It is responding exactly to the biosphere. The biosphere is creating climate. Nature never makes a mistake. We do. And what we're getting is homeschooling. We're getting homeschooled by the planet every day and say, take a look at this. What do you think about this? Yep, that was a bad one. I'm not trying to minimize people's loss or suffering. Not at all. I'm not laughing at that. I'm just saying is that when you look at it from that point of view, then it's feedback. And any system that ignores feedback perishes. And so we're a system. We're called humanity. We're called civilization. We live here on this beautiful planet, and it's giving us feedback. And our response has been really inadequate. And we're trying to change that so that regeneration, the term, has big arms. It enlarges, is what we are. We are regenerative. All of life regenerates. It's what, all 30 trillion cells in your body right now, every nanosecond, are regenerating. I mean, you wouldn't be having this conversation if that wasn't true. So regeneration is innate to us as people, as families, as fathers and mothers and uncles and aunts, as like This is what we do every day, you know. And so I wanted to take the climate conversation and not to dismiss the technological solutions, or certainly not to dismiss renewable energy, which is vitally important, but to break it open to, in a larger sense, so that people feel like that impetus they have innate to them to regenerate life on Earth not only creates more life, but it brings us ourselves back to life.
And so, Paul, let's talk about the regeneration process, because I'm looking at page 249 of your book. You've laid out a few guidelines. I mean, what principles should people be keeping in mind as, you know, they try to regenerate, which, like you lay out, our bodies are doing every day, every minute?
Well, the first principle is to understand just a working definition, which is mine, and you can do it yourself, you know, your own definition, but mine is to put life at the center of every act and decision. In other words, does this harm life or does it increase life? Pretty simple question, really.
But how do you answer a question like that? Because, you know, I think about it from the perspective of, you know, what I'm going to do for dinner tonight, right? I think we're going to order pizza.
Yeah.
Does that harm? You know, it's going to be delivered to us.
How?
In a bicycle.
There you go.
Which I guess is good.
Yeah.
You know, but does that harm life, or does it reduce life? Does it help? Should I have gone to the grocery store? Should I not have ordered groceries online? Should I go walk by foot to get groceries? I mean, there are all these questions that we can try to answer with that checklist every day, and we don't necessarily know the answers to them.
Of course not. Let's just turn the question around and say, do you want to degenerate life on Earth? I don't think so. That's not your purpose. That's not why you're here. And that's what the entire economic sector does. It extracts life. If you just go down any supply chain, you'll find when you get to it, not very far, that it is taking life itself, you know, removing it, killing it, you know. And the fact is that that's degeneration. So the book is saying, well, that road doesn't go much further. We can see the end of that. That's ocean acidification. That is extreme weather. That is fires we can't even put out. You know, not just the fires, not just the northern hemisphere is on fire. We don't even know how to put the fire out anymore. They're so big. And so we can see, like, do we still want to go down that road any further? I don't think so. So regeneration is just a 180. It's a pivot. And it is step by step, bit by bit. But at least the question is there. For example, you could, like, does it or does it not? And does it create more life or reduce it? Does it, most importantly, does it steal the future or does it heal it? And we have this idea that the world economic system works the way it does and makes so much money for so many people, blah, 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 because it works. Well, yes, and it is also stealing our future. If it wasn't stealing our future, there wouldn't be all these headlines about what's happening to the environment, to Earth, to people, etc. And so we pose the question as, what would it look like to have an economy that heals the future? That would be a GDP too. That would be revenues too. That would be companies as well. But very, very different orientation. And it is a question, but you have companies, the biggest food company in the world is Nestle. And tomorrow they announce that their motto going ahead is generation, regeneration. And they're taking it very seriously about, okay, we need to pivot to regenerative agricultural systems if we're going to continue to exist as a company, as a food company in this world, in this Earth at this time.
Paul Hawken is an environmentalist and also the author of Regeneration, Ending the Climate Crisis in One Generation. The new book came out yesterday. Paul joined us on the phone from the San Francisco Bay Area. He's also an entrepreneur and activist. He's dedicated his life to environmental sustainability and changing the relationship between business and the environment. Paul Hawken, thank you so much for taking the time. And thank you for joining us on Bloomberg Business Week Radio this afternoon. Katie, thank you for co-hosting with me. That was fun.
Thank you, Tim.
We'll do it again.
Yeah, it was fun.
Well, you're listening to Bloomberg Business Week, and coming up next, it's Sound On with Joe Matthew. This is Bloomberg Radio, and this is Bloomberg.